Good afternoon, traders. This is Christian Farmer at TTG Trade Group, and this is your end of day market recap for Tuesday, May 14th, coming to you from downtown Manhattan. And let's start with the risk disclaimer. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through is for information purposes only. So pretty constructive day overall. We had this PPI, the first of the two inflation reports for this week. We should bring up the economics, because we do have a important report tomorrow, which is the CPI report. They're looking for a 0.4%, but really, who knows? I think this is a really good example today that even if you would have had the economic data in hand today in terms of the 0.5 month-over-month increase, you may not have got the direction right in terms of the overall market. So I kind of think the same thing for tomorrow. They're going to pick apart that CPI report, and no matter if it comes in 0.3, 0.4, 0.5, right? And they're probably going to find something that's going to be, either positive or could be alarming, that something is increasing or decreasing. But, even if you have the answer, you still don't know how the market is going to respond. And then I thought what was really odd to me today was the revisions down. I mean, it kind of just shows you as well that, how much error there is in these reports. 0.2 was the last month, and look at the revision comes in negative 0.1. So, it kind of just throws out like also the whole increase for this month. It kind of is negated when you look at the previous month. So how they come up with that, I have no idea. But the bottom line is, you could try to prepare for all these things in terms of trying to compute your own CPI report and think that you may have an idea of what's going to happen. Best thing that you could do, in my opinion, is be a risk manager. And that's really something that I try to reinforce at Tribeca Trade Group. We talk about, running a scenario analysis. Well, what happens if if the market does sell off on the report? What are you going to do? Do you have too much risk on? And before the event comes out, right, you could go through that whole scenario analysis, and that's the whole idea, is to go through the scenario analysis and try to understand if you think that you do have too much risk on, or if you're in the right place, or maybe you don't have enough risk on. But that's the goal, and then to make adjustments as always. And if you want to put a hedge on, which we talked about in the weekend video, to make you feel a little bit more comfortable, if you do have a decent amount of risk on, that's something that you could do with the VIXs at a 1340, right? You're putting on if you need to put on a portfolio hedge, right, you could do that at a very much cheaper when the VIX is at an 18 or a 20. So again, you kind of always take what you know at hand, right, and understand like what you can do with an unknown event. It's very, very important that you think the problem through, and then you have less surprise, right? One of the things that I try to say is, because during the week I'm usually trading a good number of positions, some of which are positions that I'm just in for like a trade from point A to point B, some of which I have much more conviction in, and I may stick in the trade. Now, if a name gaps down, on a name that I'm just in there for a short-term trade, I'm more likely just to take the trade off. If it's a name that I have high conviction in for longer than, a couple days, for, possibly a longer term trade, then you might actually want a little bit of a sell-off in that name, provided that it's, in an uptrend and holding support. So there's a lot of different ways to kind of think about things to get yourself to where you need to be in terms of being comfortable going into, a big macro event day. And we also get retail sales in there tomorrow as well. All right, so those numbers are at 8:30. Overall, from where we started in the day, which it looked like very much like meme and short squeeze day 2, which it was, I talked about in the end of day video yesterday that I did get long some AMC. I got rid of that position, like, in the first hour of the day. I sold some right when the pre-market window opens up for E-Trade, which I believe is from what I understand, it's 7 o'clock. That's when I started to sell. I bought some AMC at like 525 yesterday, and I sold some at 8. And then I sold some, I think, at 12.20 and $12.20, and that was good enough for me. I left the last 10% of the position on in case it wanted to do something like go up to like $15, but I got out of the last piece at $11. So that was a nice little treat, right? And that's basically how I trade, anything that's in a downtrend, or that's something where I don't have a lot of conviction in. I'm going to be out really quick. I get a quick move and I'm out. That's not a name that I want to put. That's not a name or any of the other meme stocks. That's not really for me. I don't really traffic in names that are in downtrends. I also mentioned that it was a get out of free jail card for people who have been, in names for a long time. Some of these names up 15, 20% in 2 days. If you're not taking that money and putting it in your pocket, regardless of what your cost basis is, right? I think that's the move to be made when you have all these names rally like that, right? And to be to put these moves in perspective, like Beyond Meat's not going back to where it was. It's just that's not same thing. A Zoom video is not going back to where it was. So again, it doesn't matter your cost basis, because in this game of trading, if you're not familiar with having losers along with winners, right? Obviously, you want your losers to be small, your winners to be big, right? That's the whole name of the game. But if your ego is too big for mentioning that you've got losers here and there, then you're in the wrong game. Then this trading game is not for you if you can't get over that. And I know there's a bunch of people on Twitter that always talk about winners. Those are not the right follows either. You're not learning from those people. Those people are very self-conscious about what they're doing and don't have a lot of confidence if they're not, that's the way it goes in trading, right? You have to have more confidence in that to be able to kind of relay to your followers and so forth that you have losers and winners. Everybody does. And if you're not confident enough to be doing that, then you're not really a good follow on Twitter either. But I'll move on from that little rant. What was pretty impressive today was, one of the things that I said yesterday, because I don't really want, in my opinion, again, just different. This is my own trading style, but I don't want the meme stocks to go crazy for a week. It seems like those moves that are happening are shorter lived than what we saw back in 2021, right? So they rally for a day or two, and then they kind of go back to what they're doing. That's my guess on what's going on there. And you can kind of see by some of the names that really rallied over the session, which was the semiconductors. That was your biggest group that rallied over the session. I'm not talking about names. And by the way, here's where the S&P is. We're getting closer to this 80% rule play out, right? Also, when you look at the 1 hour chart here of S&P futures, right? I thought that this might have the making of a double top. But I think what I said in yesterday's video, or I know I talked about it this morning in the pre-market session that we have at Tribeca Trade Group as well. I said, watch this top of value, which is 52.4175. Notice on the initial reaction on that PPI, right? The price closed above the value area. So there's buyers supporting this market right now. And same thing in here. Right. This was the other day and price started to fall into the value area and it didn't do it. So this was a little double top that I said to be cognizant of if we start to break in, but we didn't. Right. And it's important, of course, always to watch where those 1 hour bar closes, 1 hour candles or bars where they close, because they didn't violate any support there. And we're at highs for the week. All right. So I was going to talk a little bit about the semiconductors. I thought that was a very interesting move, considering that they were your biggest rally day. They still have some work to do. The 80% rule is just about complete. If you're not familiar with the 80% rule, is when you start the value area either above or below, and you break all the way through. Or there's an 80% chance that you're going to move from one side of the value area to the other. That, if you're not familiar with that rule, you can Google 80% rule in value area studies, and you'll find that rule on a few websites as well. All right, and the big dog, NVIDIA, right? I know everybody's watching this name, including myself. Yes, it's been nicely consolidating here. It had this break higher and 1, 2, 3, 4, about 5. I would even call today like the 6th day of consolidation here. We reviewed this, I think, in yesterday's video too. But yeah, it looks like this is probably top of my list in terms of positions that I think are going to be interesting. I also believe that sometimes these names, like if they give you a rally into earnings rather than on the day of earnings, I think that's so much better. And sometimes when there's a lot of eyes on names, they sometimes will do that rally into earnings. So again, if you're kind of thinking about, oh, the move's going to happen on earnings, sometimes it does, sometimes it doesn't. And it's a much, much easier trade for a name to run into earnings and then let all the speculators try to figure out what's going to happen on earnings day. And meanwhile, if it rallies into earnings, you can take the money and put it in your pocket, right? It's much more of a better trade, in my opinion, than trying to guess what the hell is going to happen on that event, and if what kind of revenues and what the reaction is going to be, right? It's much, much easier the other way around if you basically get it to rally into the earnings number. Another stock that's a lot of people, like, I don't see a lot of people talking about, but Qualcomm. Right. So this is one of those situations where we always talk about earnings season and the possibility of names that have a really good quarter, and they could be a leader for the next quarter. Right? Nobody seems to be talking about Qualcomm. I don't really get it, but look at the move that Qualcomm is making, right? Really nice move and a breakout here to new highs. So very impressive, right? I know it's the popular stocks. I'm also watching this one too, right? This one kind of lost some interest too after earnings, SMCI, but it's starting to come around. Watch this 1 hour top of value, right, which is 830.92. That's the level that I'm watching, right? It's been making the series of lower highs, but it's trying to break out of this pattern. So, a lot of sideways action last week after earnings, right, which was here, recovered and just went sideways. Let's see if it wants to kind of start to build higher again. All right, so that's SMCI. That's also on my list. I know this one's been getting a lot more attention. Pure Storage had a very nice day, very nice trending type day, right? Broke out of this period. Right, this is another one. Strong earnings, settled back and forth, and looking to shoot higher here. So very strong. Here's one that I know nobody's talking about, which I think is easy. Is an easy, sorry, not easy, but is an interesting setup, which is CARG Gurus. This is another one that had strong earnings. It's on our Tribeca Trade Group earnings list, which we've got over 60 names that had strong earnings. So it's a nice watch list to kind of cycle through and look for setups. And this looks pretty good to me too, in terms of a lot of sideways price action. I like that. I like sideways consolidation in an uptrend, and then I like when things break higher. And it looks like CARG Gurus is trying to do that. The cyber names are waking up. CrowdStrike, right? I started to watch this name in the beginning of this week. I knew that there was this virgin point of control, and I wanted to see what was going to happen there. Remember that virgin point of control is when the blue line is above the price action, it represents overhead supply, right? It's where a lot of buyers and sellers, a lot of volume was previously that we haven't returned to. So sometimes when you return to that levels, the sellers kind of take control, and there could be trapped holders of the name, and they're looking to get out as soon as it gets back to this, right? Where this is coming from is from this value area and all this consolidation. So you get back there, and sometimes you get a rejection. We did get a rejection, but on the second attempt, maybe maybe the selling has dried up, or that seller has finished what they're doing, and perhaps this name could begin to trend again. But it's been, remember, this was a name, just to put things in perspective. This is a name that had a huge run. So there's nothing wrong with the name going sideways for a couple months, shaking out everybody, all the weekends, and then resuming its trend. So very nice there. I also wanted to go over Google. Google had their event today. Google's kind of shaken me in and out of this trade. I should have really gotten back into it yesterday. I like that test of the 20-day moving average, which held. But regardless, I want to be in this while it's above its 5-period moving average. So above the value area, above the 20-day moving average, and then, for the short-term trend, above the 5-period moving average. So I did get back into this one today. A couple other names that I wanted to review, and I think that's basically enough. I think I did Toast is another one that's on my list. KKR, just to kind of move to the financials a little bit. I like the private equity companies, right? We've seen a lot of the banks do well, right? Nice little like W pattern here, broke out, retest, somewhat of a retest, and back in here. So it's not extended or anything like that. And I was looking at APO earlier in the week, right? Apollo, but I think KKR right now is showing the relative strength. So I will always go towards the relative strength. And what else? I think I had one more name to kind of review. Oh, the copper names, right? Really strong in copper. COPX, you could look at the whole group, right? Here's the copper miners. Again, I favor SCCO. I think I reviewed this in yesterday's video. Notice how the chart looks very similar to that, very strong in this group. So that's it for tonight's video. We'll keep it somewhat short and sweet. If the way I'm doing these videos is I'm doing a couple public videos a week, and then the next videos will be members only, where I review open positions. I'll talk about, I go through every open position. I talk about whether I want to add to it. For example, like this one trade that I have on, which is fixed. Again, I like to look at some names that are a little bit off the beaten path, but this is a name that I caught the breakout, took some profit targets, I added back into the test of the top of value, and then I was able to take a target in this one. But most of my videos a week, for instance, next week they will be mostly for members, and I'll be reviewing additions to the watch list, and go through thoroughly open positions so that you can kind of see what I'm doing and why I'm in some names in different groups. So what I would do is, if you're not a member of Tribeca Trade Group, what I would do is go over here, right, to tribecatradegroup.com, and you could sign up. For new members, you could use the code TTG new, and you get half off your first month. That's what I would suggest you do, so that you can get a taste and get a flavor. Because as I mentioned in the beginning of this video, right, it's a lot about risk management, right, and understanding. We see so many trades. I gave this this was one example that I used earlier, where I was talking about, I look at option flow, but there's so many people who are really being deceptive about, like, oh, Roku calls. I saw Roku calls go up, right? Well, what time did the Roku calls go up, right? And there was a large trade in that today, but right, so here's where, like, for instance, right, here's a trade of Roku, about $1 million in notional. Look at where it hit, right? This is exactly the timestamp of where the Roku calls hit, right? Do you want to be buying the stock up 5%, even though that there was calls on the tape? Probably not. But the person who tweets about this is going to take credit for, like, oh my God, it was the Roku calls. No, they went up at the exact high of the day. So a lot of this is really, it's a little bit like playing poker, right? And folding on a lot of situations where the setup isn't perfect, right? You draw a hand of cards and you get a pair of twos, right? You're going to fold on that, right? You're only going to play the best hands. In another hand, you get a high card of 10, right? You're not playing that hand, right? So that's a lot of times what looking at option activity or looking at charts and trades is you take a look. Nope. It's not the best setup. It's not the best setup. It's not the best setup. And then when you see something really good, then you take the trade, right? When you have a good hand, then you play the hand. All right, guys, that is it. Have a great night. See you tomorrow.